This is Tom Cloud with this week's Precious Metals Market Update. We haven't done one in 2 weeks because we've been displaced with the hurricane going near St. Simon's Island, Georgia, where we live. So we're glad to get back in the office and appreciate y'all's support and prayers during this time when the East Coast was hit so hard by Hurricane Matthew. But anyway, I want to dig right in with questions coming in, and we do appreciate the questions, and we do try to answer them on these. Of course, the most asked question is about the SDRs at China. China now has had their SDRs for 2 weeks, and we still have not seen a release of their gold figures, how many tons of gold they have. And certainly we know the audited gold reserves were given to the IMF because they have special drawing rights. We also know that they're 14 point something percent of the basket, while the US dollar, of the 5 currencies in the IMF special drawing rights, the sterling pound, the Japanese yen, the US dollar, the euro, and now the Chinese yuan. So all we do is speculate. If they've given them the reserves and the IMF elected not to tell the world what China's reserves are for whatever reason, then it starts mass speculation. And of course, the most common one is they have more gold than the US, so the US really doesn't have what they say they have because the numbers wouldn't add up. So that's one speculation. Another is they've only given part they wanted, enough to get the special drawing rights, to get their currency in the pot of currencies, but yet we still don't know exactly what they have, and even the IMF knows they've been given numbers that aren't the real numbers. So you, the listener, have to decide which one you believe. But let me tell you this, in case you don't know. Even though the US dollar represents 42 point something percent of the special drawing rights of the IMF, the United States voting rights are 51%. So basically, the United States has decided not to release these numbers. So they may help you in your speculation, your investment decisions, and what it might mean to you, the investor. Now, let me go next to when you've done this for 40 years and had ties in Europe for 35 of those 40 years, and you're talking to people that are now in their late 70s and early 80s that are truly crusty experts that have been around this forever. And of course, they come in and ask questions like, what did Janet Yellen mean this week in her speech in Boston when she said the Fed would not be against stepping in if they needed to buy stocks? People, I don't know when we're going to get it. I don't know when we're going to figure it out. But certainly, you got to look at a Fed that's a private company given the right to print the money supply, and we pay them interest that's owned by central banks, and we don't do anything about it. We just continue to say, yeah, that's okay. Print the money, buy stocks, give the rich people more money, have a trickle down to the middle America, and they just keep getting further and further behind the 8 ball. But we don't have people or politicians that'll stand up. The last one that did, John F. Kennedy, was assassinated. So you look at this thing and you say, how ridiculous is it that a country this great still allows a private company to print money and we pay them interest to borrow it? Why can't we print our own money? We should, and hopefully there'll be somebody like Trump, not all the attributes of Trump, but can step up and get this thing done, because under the system we're now, it's never going to happen. Federal Reserve is going to continue to print money, and they're going to buy bonds when nobody else in the world will buy them. They're going to buy stocks when nobody else in the world will buy them. And they're going to continue to print money in emergencies and quantitative ease as the economy needs it. Meanwhile, our debt hits 20 trillion. Under Obama, the debt goes from under 10 trillion to 20 trillion. And they're showing us now that if Hillary's elected, we're looking at as much as 30-something trillion dollars in 4 years. I mean, people, when are we going to get it that we've got to take our country back over. And yet, nobody's willing to step up and do it. They're worried about who's having an affair with who rather than the future of this country. So all I can tell you is silver, and let me jump right in, email after email. Silver's still up over 20%, but it's not up 45% anymore. Do you still think it's a good buy? Yes, I do. But silver is an industrial metal. We've talked about it many times. If the world thinks the world's going into a recession, gold's going to go up in 2008 like it did, and silver stocks are going to go down. That's what most people that I have trust in and confidence in Europe believe. They're holding on through the election as they do, whether it's a Republican or a Democrat incumbent. In there, the Good Boy Network has always said we'll keep the markets level in the months leading up. If you don't believe me, go look at the numbers, the stock market, gold market, bond market. So something's coming to a head in less than a month. So do you have to make decisions now? No. You can wait until the market makes the decisions and they start moving. But I'll say it again, I'll be buying gold. I've said it. I have nothing against silver. Silver's underpriced. And when we print money worldwide and when economies are in dire, silver's going to go up as that money is printed for uses, all kind of different uses in the economy. But gold is money. Gold has been money since the second book of Genesis, when God ordained gold in the Garden of Eden as a trading vehicle. And it stayed that way from the Garden of Eden until 1971, when Nixon freed us and you no longer had gold and silver to some extent behind money. So are we headed back to a gold reserve? Central banks sure think so. Look at their purchasing. Banks are buying gold like crazy, and we're seeing shortages of gold, physical gold, and yet the opposite, we see silver readily available right now. So does that mean you shouldn't buy it? No. It means you should continue to cost average into silver and get into gold for protection. End of story. Because gold is money, and all the problems we foresee are going to involve money. So hopefully we've answered some of the questions. If you don't have a precious metals IRA, you need to get one of those to have physical gold and silver. We can help you by giving Dan, Kathleen, and myself a call at 800-247-2812. That's 800-247-2812. And if you're still holding rare coins, you need to get out of. At some point, Jerry and I are going to do a show, and I'm going to tell you about the nightmare of rare coins. And I've also done an investigation of what it would cost these ads that are on Fox News and regular news for these coin companies. And when you find out and hear what they are, you can see why their markups are 20, 30, and 40%, while we mark gold up 2.5% and silver 3%, and we pay for the postage and the insurance, and we resell it free for you. There is nobody going to give you this kind of round trip and have a low break-even point of less than 4% when you're buying, when with most of these companies, it takes about 40 to 50% for gold or silver to go up to break even. You've got to use your brain and do that, and we're happy to answer those questions. So once again, give us a call at 800-247-2812. Till next week, this is Tom Cloud signing out.